All right, thank you for that. Can we get the slide up? Great. So, in 1898, delegates from all over the world came together in New York City. And they were there to discuss a very pressing problem. It was impacting most of the major metropolises around the world. It was linked to health issues, and it was devastating the communities. Something had to be done. But what were they talking about here? Well, they were talking about this. Cities like London or New York City were literally covered in shit. In 1894, a reporter in the Times of London had predicted that the city would be buried under 9 feet of horse manure in the next decade. In 1890, someone from New York City predicted that by 1930, the city would be buried up to its 3rd-story windows. There were over 150,000 horses living in New York City in the day, and each of them together was producing 4 million pounds of manure, plus 40,000 gallons of urine. The horse was absolutely essential to human civilization at the time. Without horses, our transportation infrastructure would cease to function. Food would stop going from the farms into the cities. People would no longer be able to travel and do business. Human civilization was built on the backs of horses. Now, this is what the end of a paradigm looks like, where the way it functions can no longer encompass the scope of human civilization. And so, this is what happened. Cities covered in shit. People sweeping piles of horse manure away as people wanted to cross the road, and everything that came along with it. Now, how do we solve this? This is clearly a very serious problem. I think this guy right here is really feeling the pain. So, where did the solution come from? Well, it came from people like this, and the kinds of ideas that he represented. Now, if he had asked people what they wanted in this time, they would have said faster horses, because everybody was still living in a paradigm where all transportation was built on the backs of horses. And it took a visionary from the outside to figure out the new paradigm that was going to handle the next 100 or more years of human civilization and prosperity, progress, and so on. Now, in 1900, there was only about 4,200 cars that were sold in the United States. But by 1912, that number had risen to 356,000 cars. And by the end of that decade, the automobile had replaced horses in every industry. So this entire transition from a horse economy to an internal combustion engine economy takes 20 years, and that was 100 years ago. Things are moving faster today, and these kinds of transitions are happening all the time. Going back over the last century, we can see this accelerating trend. Horses, radio, television, and then we get to the internet, personal computers, mobile devices, and now cryptocurrencies. We tend to forget how fast the world is moving forward and how quickly things are now being overturned. So when Bitcoin came along, I was working in the securities industry, and this innovation prompted me to understand the technology and figure out how to apply it in this industry, which, when I got there, looked to me like it was covered in shit. And I'm going to explain a little bit more about what I was looking at when I was doing my work in the stock brokerage industry. So this is the big dirty secret of the securities industry. you do not actually have title ownership to your stocks and bonds any more than you have title ownership to the cash that you have in the bank. And the reason why this is the case is because of the current paradigm that we're in. To actually have your name or the name of the ultimate owner of every stock and bond on that certificate is not technically feasible with the system that we have right now. So at the moment, pretty much all of the publicly traded securities in the United States are actually owned by a partnership called Seed and Company. And they are a subsidiary of an organization called the Depository Transfer Clearing Corporation, DTCC. And when you trade a security, you don't actually immediately receive it in your account. Between the day that you actually complete the trade and the day that you actually receive the money or the securities, there are 3 days, and this is called T+3, trade date plus 3. So we have trade date and settlement date. And between the 2 days is this limbo period. And this creates problems. So think Lehman Brothers or MF Global. While these securities are in this transitory phase, let's say at T+2, the issuer decides, I'm going to pay a dividend. They don't know yet who the new owner of that stock is going to be. So how do they pay them? Well, you have to go back through the records and make adjustments manually. Let's say somebody goes bankrupt during that 3-day period. Now, the person who thought that they were going to receive the stocks that they paid for 2 days before finds out that they're the creditor of a bankrupt company, i.e. Lehman Brothers and MF Global. So having this T+3 system has a lot of inherent risks and problems to it. And I'm going to show you the layering system in the securities industry that is responsible for this system. So between you and the company that you're investing in, there are multiple parties that are involved here. And it's actually very similar to the banking industry. So in the banking industry, we have central banks, we have banks, clearinghouses, payment systems, and all of these intermediaries between you and your ultimate money. Something very similar exists in the securities industry. So between the issuers of securities, we have depositories, transfer agents, finally brokers, and then you. And there's parallels in the banking industry to all of these. So the depository is a lot like a central bank. Transfer agents are your clearinghouses, brokers are your frontline salespeople, and then finally you. And the reason this exists is because in 1970, we had an event in Wall Street called the paper blizzard. And very similar to the horse manure crisis in the 1890s, the paper blizzard threatened to wipe out the entire securities market. Now, at the moment, depositories were not in use. Everything operated on a paper-based, almost peer-to-peer system. Brokers would conduct trades on exchanges. Those trades would get netted by the transfer agents, and then ultimately the paper certificates would then fly around every day, carried on the backs of couriers all over New York City. Eventually, and particularly over the course of the 60s, trading volumes got far too large for this system to handle. So just in the 60s, for example, trading volumes increased by over 4 times. Now, to compensate for this increased workload, they did all of the wrong things. They decided, well, we're not going to have 5 trading days per week. We're going to have 4. So the market's closed on Wednesday. And so you could only do business on Monday, Tuesday, Thursday, Friday. That didn't work because, of course, everybody who was going to put their trades in on Wednesday just put them in on Tuesday or Thursday. And as you would expect, by a system choking on its own paperwork, lots of people went bankrupt. Over 100 firms in New York City either filed for bankruptcy or were bought up by larger companies with bigger back offices that were able to handle the paper load. In response to this crisis, two things happened: dematerialization and centralization, or you could also call it immobilization. And so they changed the entire structure of how securities were owned, traded, and settled by introducing organizations like this. So I mentioned Seed and Company earlier. So in today's world, when a company issues securities, the entire block of shares is registered in the name of Seed and Company. And let me just go back. So that goes into the depository. So the depository is now the legal owner of all of the securities, all of the publicly traded securities in the country. The private markets, by and large, are still not using depositories if the company is thinly traded. They have maybe a couple of hundred investors. But there are private companies that have thousands or tens of thousands of investors that also use this system, because this was the best idea that they could come up with in that day and time to deal with this huge paperwork crisis. And so the ownership of all securities were centralized in these single entities. The second step was dematerialization, which means no more paper share certificates. So now everything is held in book entry form. So the issuer registers ownership of the stock in the hands of the depository. The depository has a book entry liability to the transfer agent, who in turn has a book entry liability to the brokers, who in turn have a liability to you. In the industry, we call this systemic risk. Because if anyone along the chain fails, you can have a cascading problem that gets very big very quickly. Now, as this system has progressed, we're starting to see more and more interesting outcomes. And for example, just last month in January, the Canadian depository, which is called CDS, filed a proposal to the OSC to make it mandatory, or basically make it so that they do not have to take paper certificates into their vault anymore. So think about that for a second. We have a securities vault that refuses to allow issuers to deposit the securities into it, and they still want to charge a deposit fee. So this, again, to me, I look at this and I see the end of a paradigm. So how do we solve this? Well, fortunately, cryptocurrencies came along, and blockchain, and Bitcoin. And suddenly, from outside the solution to this problem of clearing and settling pretty much any intangible asset, anything of value, we can put now on a peer-to-peer system that, in terms of the issuer and the investor, has almost no cost and functions in real time. This is the industry's dream. This is as big of a change to the financial industry as cars were to the transportation industry. And I think a lot of people in the industry are still coming to terms with this. We see mutated versions of it: permissioned blockchains, private blockchains, tokenless systems. And this is all of the industry's attempt at taking something like the car and feeding it hay. You know, it's not going to work. And when I talk to these organizations and I ask them, hey, what do you think is the key value proposition that a private blockchain has over and above an enterprise SQL server? And the best IT minds in the industry can't tell me. So as far as I'm concerned, they're on the wrong path. And the true implementation of any blockchain is going to have to be open, peer-to-peer, and the industry will be getting back to its original roots, where the brokers are working directly with the investors, everything is registered in your own name, and we have far lower counterparty risks. Now, we have a blockchain for money, and it's been quite successful over the last 8 to 9 years. It's called Bitcoin. I think just as of last week, it's worth over $17 billion. Now, a lot of that Bitcoin is not circulating. It's being held. People are holding onto it, watching the price go up. Now, to complete the entire financial system, though, we need more than just money. We need stocks, bonds, derivative products, and all the other financial instruments that are forming this invisible empire of money that is helping to route goods and services from the producers to the buyers and is producing the quality of life that we have today. So my vision for the future of blockchain was not necessarily one blockchain for all people and all things. We don't see that anywhere. Everything is specialized. And that, I think, will go for blockchains as much as anything else. And so rather than co-opt Bitcoin or another blockchain to produce a security system on top of, I founded a company called EDC. And we're working on something called Equibit. Now, Equibit is for the capital markets what Bitcoin is for money. And it's its own dedicated blockchain, and it has 3 key components. It has a blockchain asset register, which should be good for debt and equity. It has a communication system, and it has a compliance system. Now, why did we put these 2 other things in it? Well, if you're an issuer and you have shareholders, what does that relationship look like? Well, I need to know who my shareholders are. I need to talk to them. They need to send me messages back. I need to pull them. I need to know who their proxies are. And I also need to know if I'm a private issuer, I need to know if they are financially qualified to hold my private shares. So we introduced 2 key innovations into blockchain that solve these problems. So the communication system is a fully fledged communication system that allows for 2-way end-to-end encrypted messaging. You can create chat groups, you can initiate polls and responses, designate your proxies, and it will govern also something called open outcry. Now, who here has ever seen Trading Places with Eddie Murphy and Dan Aykroyd? Hands up. Wonderful, wonderful. So we all remember the closing scene where they go to the commodity exchange and they're sitting on the floor, and all you see is swarms of people hooting and hollering, yelling in code at each other, and you know something is going on, but you don't really know exactly what. Now that's called open outcry. And what they're doing is they're making offers or overtures to each other. And they're offering to buy something or they're offering to sell something. Now this is very easy to model in a communication system because all it is a public message. And you can disseminate these very easily over a peer-to-peer system. They propagate very quickly, and everybody can see what it is that you're offering to do. And so our communication system has these public components in it, which is going to provide liquidity for shares, all in a peer-to-peer fashion. Now, we also have a compliance system, and we do have to deal with regulators in this industry. Unfortunately, the hurdles in the securities industry are quite high. So we made it, though, a voluntary system because we didn't build it just for the North American markets or the European markets. We built this system for everyone. And there's a lot of countries out there that don't have necessarily the stringent and onerous AML and KYC laws as other countries do. So just to make things very simple, there's about 3 different kinds of securities that exist. There's private capital, or private securities. There's public securities, which is what you see on stock exchanges. And then we have this other animal called bearer bonds and bearer shares, which, when you know what they are, they seem quite wonderful. These are companies that you can invest in completely anonymously. Possession is ownership. Unfortunately, the regulators are not big fans of these, but it's not necessarily for the reason you think. It's not because ownership can be done anonymously. It's because there's so much fraud going on in this system. Bearer bonds and bearer shares are one of the easiest things to forge. People who are out there trying to print US dollars or any other national currency are really in the they're in the wrong line of business if they're counterfeiting. Really what they want to be doing is forging bearer bonds and bearer shares, because the security features are much, much, much less tricky. But because of this, even the investors look upon these kinds of instruments with a lot of skepticism, despite the advantage of being able to hold them anonymously. However, with something like Equibit, we can solve this problem of forged securities, because of course, everything is done with public key infrastructure. You cannot forge somebody else's security anymore. So the key reason for avoiding bearer bonds and bearer shares is now eliminated. And it's done in a way that no security feature on a paper document could ever hope to match. Going into regulated offerings, though, public and private shares, the compliance system that we've introduced will help to minimize your exposure in terms of identity theft. So if you wanted to trade in a public company or even a private company, you have to reveal your identity pretty much every single time you want to conduct a trade. And that's sort of been the paradigm that the industry has worked in for ages. So anybody who's done a trade in a private share, they know how hard this can get. There's lawyers involved, there's accountants involved, the certificate goes back to the issuer for verification, validation, they reissue it to the new owner. It's not easy. And you're constantly giving out your identity. So the industry's response to keeping this control over the AML KYC laws has been to control the blockchain. And this is why we have permission systems. You can't get in unless we've proved. So doing this in a peer-to-peer fashion represented a challenge. But we feel that we've come up with a very good solution to this, and we call it a trading passport. And a trading passport is cryptographic proof that a competent party has done their research on you. And if you just have to get through the basic AML KYC hurdle, there's a passport for that. If you have to get through accredited investor certification, there will also be a passport for that. And now, you don't have to reveal your identity on a transactional basis. Only the entity who issued you your passport to trade and access these companies is the one who owned, or the one who knows who your identity is. These would ostensibly be stock brokerages, other kinds of broker-dealers, stock exchanges, law firms, or anyone bound by privacy legislation. And this will create an incredibly efficient secondary market, particularly for private shares. Because again, transacting in the private capital markets can be quite a challenge. Finding companies, finding who is selling those companies, and conducting the trade all can take days or weeks. And we have just created a system that can accomplish this with a few clicks of a button. So the key message that I want to finish off with is that we are in a world of changing paradigms, and they are changing incredibly fast. Faster than our grandparents could have imagined, faster than our parents could have imagined. We quite literally are living in an age where miracles are becoming possible. Scientists are seriously discussing things like ending our own mortality. There's actually scientists out there that are saying that if you are under the age of 40 today, we may never know death. And this is not science fiction. Interstellar space travel. is a theoretical possibility. There's something called the Alcubierre drive, which was put out by a French scientist several years ago, and it is theoretically real and could send spacecraft multiples of the speed of light anywhere we want to go. These things are happening today, and in our lifetimes, we will see a world emerge that will make the world that emerged during our grandparents' lifetime seem boring. So thank you very much. Yeah. Do I have any questions?
Thanks for the presentation. It was very interesting. But what do you think about ICOs right now? On your platform, we will be able to trade traditional assets, or we will be also able to trade ICO tokens?
Yeah, the ICO space is getting pretty muddy these days. We're seeing a lot of ICOs that are a pure blockchain token, which is what we're offering in our ICO. It's the Equibit token. It's what is required to power making issuances over the Equibit system. So think of Equibits like Ether. You need Ether to run a decentralized app on the Ethereum platform. You need Equibits to conduct issuances over the Equibit system. So that's a pure token. But we've seen a lot of other kinds of offerings that really are crowd sales of equity. And depending on which jurisdiction they're doing it from, it may not be strictly, or it may not be legal, strictly speaking. Now, in the United States and Canada, we have new rules over crowd selling equity, which are quite good. They're not as onerous as doing registering a public offering of securities, but they do cap the amount that you can raise. Now, we're not crowd selling equity in EDC, but we are offering it privately to qualified investors. So if there are accredited investors here today that are interested in helping fund our project, come see me and we can talk about an equity investment in EDC. But for the public, we have our ICO with the native token, the Equibit, and that's what that offering is.
So you say you've created your own blockchain. Could you describe it in terms of, has it been launched yet, and transactions per second, block times, and is it proof of work or proof of stake?
So it is a fork of Bitcoin, but we've made obviously a number of significant upgrades to it. It's a proof of work system, and we're going to be changing the hash. We are not announcing what that hash is going to be at the moment, but it is one that there are no current ASICs for. And so the system itself will also be upgraded with, well, one thing that we're still waiting to put in is segregated witnesses. But we can do a bit more of a, I guess a easy way to put it is a more complete implementation of it, because we don't have to worry about a hard fork. So we anticipate that the Equibit blockchain should be able to handle somewhere within the realm of 25 transactions per second. Now, let me go back to how I was talking about the system working in layers. So we view the Equibit system as the settlement layer of the securities market, and that is not something that needs to happen. You don't need huge volumes of transactions per second, because typically a settlement mechanism only triggers once per day. Now, there are other high-speed transaction layers that are built on top of that. And so in Bitcoin, we see what is coming out to fill in that gap is the Lightning Network. And being a fork of Bitcoin, the Lightning Network would work just as easily on our system as it would on Bitcoin. And so we're currently investigating the feasibility of the Lightning Network because, of course, we want to scale our system as quickly as possible. We're already talking with stock exchanges and stock brokerages that are interested in this system. We've even had calls from some of the largest banks in North America, and even a couple of transfer agents who I think are doing threat assessments on us.
What's the ETA for the launch?
We're expecting to publish this in this summer, so June, July.
Hi, I got a question. What do you think is the probability that the Winklevoss ETF is going to get approved?
Ooh, that's hard to say. It's been on the table for so long. But you know, they as far as bringing Bitcoin to the mainstream, they've certainly done it, I think, in the right way. The only issue I find is that, you know, a single asset ETF is not all that exciting. If it was an altcoin trading fund that, you know, maybe was weighted pretty heavily in Bitcoin, that would be a little bit more interesting. But that being said, one of our post-launch strategies is actually to do something very similar to what the Winklevosses have done in New York. So EDC will be setting up a securitization vehicle where we will be able to take ETFs or even single companies off of the mainstream stock exchanges and put them natively on the Equibit system. And now you'd be able to directly purchase the S&P 500, the Dow, the DAX, the FTSE, the Nikkei with your Bitcoins. And when there's enough companies issuing natively on the Equibit system, we can run the process in reverse. And we can do an Equibit 50 index, package up those companies, and put them on the Frankfurt Exchange or the London Exchange. And we can run this system in both directions and introduce the mainstream capital markets to cryptocurrencies in a very positive way.
All right, thank you.
Oh, no, she's not. No. False alarm.
Hey, thanks for the presentation. I came in a couple minutes late, no more than that. Did I miss the ICO date launch? Was that up there earlier?
Oh, that launched in February 1st.
Okay.
It's currently running until the end of March, although we are currently contemplating an extension because of the troubles in the Chinese markets. They've closed down, and a significant portion of the visitors that came to our ICO site before that happened were coming from China. So we want to make sure that they can, you know, have the time they need to finish buying whatever, you know, fill their appetite for it. Now, interestingly enough, though, the people I've been talking to in China have been telling me that the ban is actually for 45 days, and the media has reported 30. So whether we extend it for a month or a month and a half, you know, we're not sure yet.
Was there a bonus in the first hour, day, week, or was it just steady, same investment payout for the whole process? Like, was there like a bonus to get into ICO the first week or hour? Sometimes you see the incentives, right?
Yes and no. So we are packaging it up like kind of like any merchant would sell a limited amount of inventory. So as it's depleted, the merchant is going to start raising the price to prevent themselves from being completely sold out.
Has there been like multiple, like how many tiers of price increases are there going to be throughout the ICO, and where are we now?
Yep. So there were 10 tiers.
Okay.
Each tier had 100,000 Equibits for a total of 1 million being offered, and now we're currently in tier 3.
Okay, perfect. Thank you.
Hey, Chris. I am an investor in Equibit, and I was just wondering maybe you could kindly share to us what recent news has happened with Equibit that you have going on in the news.
Oh, well, we just recently were covered by Forbes magazine a couple days ago about the progress of our ICO. So we just recently finished raising, we've raised at this moment just over $500,000 US, which is, you know, where that's put us in a pretty good position to finish the 3 core products, and more is going to help bring us to all of our post-launch strategies, like the securitization vehicle that I talked about. We're also planning on building a pro version of our web wallet, or we're calling it a web portfolio because it's, you know, securities. And we're also looking at possibly producing our own mining rig to help with proliferating the mining power of the blockchain. Because we're very concerned about, you know, we're launching a brand new blockchain, so we want to make sure that we get enough nodes running and mining the system. And to that end, we're also going to make the software available through most of the enterprise cloud platforms. So think, you know, AWS, Google Enterprise Cloud, Microsoft Azure, So it would be very easy to scale mining power if you're on those systems. All right, well, thank you very much.
In a world where Antifa riots in the city streets, cops rage out of control, and the leader of the free world is a fat-ass casino owner, one event stands alone to make anarchy great again.
I actually love humanity. That is why I'm an anarchist.
Backwards in the building like we the ceiling, we illin'. No matter who find it appealing, I'm here and I got a feeling that we'll be dealing a lot of pain with the penicillin get drilled in your head. That we are monsters and yeah, we come from the slums and for months we've been pumped, but for once I am now comfortable. I want to grow, I want some more success, and I want to know that greatness can't be rushed, can't be less, so face the bus. Feel free to hate on us, we lace them up. Dudes, we done paid them up. Keep snakes away from us and safe from us, you might wanna be. Remember when clowns used to make fun of me and that they wanna be me, see me and they run at me. I'm gonna be the greatest, yeah I wanna be, but I am not the one to be the fakest for the sake of being played. I'm here, like I never left, said so hell, nah, cause I can't just fail, so just prepare your ears, it'll get for real. Take from here, we will never take the sale, it's grind time. My mind and my thoughts, my highs and my faults, my wins and my loss, when will I fall off? It's a chance for me, you are now listening to Veracity, yeah.
Fuck the media, fuck the banks, fuck drone strikes, fuck tanks, fuck hunger, fuck war, fuck ignoring of the poor, fuck the left, fuck the right, fuck the government. Thank you, thank you, thank you, thank you.